The quarter gone by, it was expected to be a strong quarter. It has turned out to be a great quarter. For me, what really stands out is that margins have expanded year on year, which is what I think is the hallmark. How much of the margin expansion has happened from properties which you currently own, where rates have gone higher, and how much has happened because of the new properties which you've added, which are adding to more benefits?
Actually, if you look at it, that standalone has done very well on the margin part, but on the top line growth, it is not at the same level as consolidated. So it's very good. It's at 13% top line, but consolidated is at 16. The traditional businesses is all combined with the new is at 16, but if we take the new businesses, which are small, are already showing 40% growth in the same quarter. So all in all, this is because the occupancy levels are high. So your ability to charge is higher. And I don't see that change coming, because if you're going to Rambagh Palace, you're going to Rambagh Palace. You're going to Lake Palace, it's Lake Palace. So if you're in Taj Mahal Palace in Mumbai, you're in Taj Mahal Palace. And if it's Taj Mansingh in Delhi, it is Mansingh. Their ability to charge is significant. And we are still at a low. Because if you convert these amounts into dollar, the quality of properties and the kind of service we provide, and these properties benefit a lot from non-Indian business, whether they come in the form of government delegations or they come in the form of foreign tourist arrivals. The dollar pricing is at a very low level. It will never be at par with the West, but we should have, at least if you are moved to number 5 economy in the world, expected to be number 4, targeting to be number 3, you should at least be able to charge half the average rates that even a Taj brand achieves outside of India, in London, New York, Cape Town, etc., etc. So even in Dubai, I would say, for that matter. So I think we are very pleased, and a lot of this comes from to come to your original question, a lot of this expansion is coming from the traditional owned portfolio, because we have invested very heavily, as asset management has been a key metric for the management, because you have all these wonderful spaces, you have all these wonderful assets, and there is so much you can do. So we are very, very pleased with all the changes. Look at Taj Mahal Delhi, which is popularly known as Mansingh. The rent increased by almost 79-80% rent increase, from 17.25 to 32.5, but the absolute bottom line performance is higher than it was at 17.25. So we must have renovated and managed that asset in such a way that this premiumization was possible.
I'll talk about
If you like this video, then like, share and subscribe to ET Now.